Looking at this year's wild market swings, I've identified 4 investments I'm loading up on before 2025 ends. But here's the thing that separates smart investors from the rest. I'm not just throwing names at you. I'm going to break down exactly why these picks could be game changers, the specific data points that caught my attention, and the research methods you can use to find similar opportunities yourself. The market has been absolutely brutal this year, with massive volatility that's left many investors confused and paralyzed. While others are sitting on the sidelines, I see incredible opportunities. Today I'm sharing 3 individual stocks and 1 ETF that I believe are positioned for explosive growth over the next few years. Before we dive in, let me be crystal clear about something. If you're the type of person who just wants stock names to blindly buy, this isn't for you. My goal is to teach you the analytical framework behind these decisions so you can develop your own investing superpowers. Think of it this way. I could give you a fish and feed you for a day, or teach you to fish and feed you for life. The 4 investments I'm discussing today are Tesla, Microsoft, Apple, and the QQQ ETF. Each represents a different investment thesis, but they all share common characteristics that make them compelling long-term holds. Let's start with Tesla, a company that continues to revolutionize multiple industries simultaneously. While many investors focus solely on vehicle sales, they're missing the bigger picture. Tesla isn't just an automotive company. It's an energy, software, and artificial intelligence powerhouse. The numbers are staggering. Tesla's energy storage deployments grew over 400% year over year in the most recent quarter. Their supercharger network is becoming the de facto standard across the industry, with major automakers like Ford and GM adopting their charging technology. This creates a massive recurring revenue stream that most analysts completely overlook. But here's what really excites me about Tesla: their autonomous driving technology. While competitors are still struggling with basic driver assistance features, Tesla has collected billions of miles of real-world driving data. This data advantage is becoming insurmountable. When full self-driving becomes reality, Tesla won't just sell cars. They'll operate the largest robo-taxi fleet in history. The financial metrics support this bullish thesis. Despite recent volatility, Tesla maintains healthy profit margins and generates substantial free cash flow. Their manufacturing efficiency improvements continue accelerating, with new production techniques reducing costs per vehicle by double-digit percentages annually. Moving to Microsoft, this technology giant is experiencing a renaissance that many investors still don't fully appreciate. Their cloud computing division, Azure, is growing at rates that would make most companies jealous. But the real story is their integration of artificial intelligence across every product line. Microsoft's partnership with OpenAI has positioned them at the forefront of the AI revolution. Their Copilot technology is being embedded into Office applications, Windows operating systems, and enterprise software solutions. This creates multiple revenue streams from the same underlying AI technology, maximizing return on investment. The subscription model transformation has been masterful. Microsoft has successfully transitioned from one-time software purchases to recurring subscription revenue. This provides predictable cash flows and higher customer lifetime values. Their Office 365 suite alone generates tens of billions in annual recurring revenue. Enterprise customers are increasingly choosing Microsoft's comprehensive ecosystem over competitors' piecemeal solutions. This bundling strategy creates switching costs that lock in customers for years. The financial results speak volumes. Consistent double-digit revenue growth with expanding profit margins. Apple represents my 3rd major holding, and despite recent concerns about iPhone sales, I believe the company is entering its most exciting growth phase ever. The upcoming transition to Apple Intelligence will fundamentally change how users interact with their devices. Apple's services business continues exploding, with revenue approaching $100 billion annually. This high-margin segment includes the App Store, iCloud, Apple Music, and numerous other subscription offerings. Unlike hardware sales, services revenue is sticky and grows consistently over time. The health technology opportunity is massive and largely untapped. Apple Watch has already become the world's leading medical device for consumer health monitoring. Future iterations will likely include blood glucose monitoring, blood pressure measurement, and other advanced health metrics. This positions Apple to disrupt the massive healthcare industry. Apple's ecosystem lock-in effect continues strengthening. Once customers own multiple Apple devices, switching becomes increasingly difficult and expensive. This creates a powerful moat that competitors struggle to overcome. The average Apple customer owns multiple devices and regularly upgrades, providing predictable replacement cycles. Finally, let me discuss the QQQ ETF, which tracks the Nasdaq 100 index. This provides exposure to the largest non-financial companies on the Nasdaq, heavily weighted toward technology firms. While individual stock picking can be rewarding, diversification through ETFs reduces concentration risk. The Nasdaq 100 has historically outperformed broader market indices over long time periods. This outperformance is driven by technology companies' ability to scale rapidly and generate higher profit margins than traditional industries. Companies in this index are often global leaders in their respective sectors. QQQ offers several advantages over individual stock selection. Professional management handles rebalancing and ensures the portfolio stays current with market changes. Expense ratios are relatively low, meaning more of your returns stay in your pocket. Liquidity is excellent, making it easy to buy and sell shares when needed. The current market environment presents unique opportunities for patient investors. While short-term volatility creates uncertainty, long-term trends toward digitization, artificial intelligence, and technological innovation remain intact. Companies that can adapt and leverage these trends will likely generate superior returns. Risk management remains crucial regardless of how bullish you feel about these investments. Never invest more than you can afford to lose, and maintain appropriate diversification across asset classes and geographic regions. Consider your personal financial situation and investment timeline before making any decisions. These 4 investments represent my highest conviction ideas for the remainder of 2025 and beyond. Each offers different risk-return profiles and exposure to various growth themes. By understanding the fundamental drivers behind each investment, you can make more informed decisions about your own portfolio construction. Remember, successful investing requires patience, discipline, and continuous learning. Markets will fluctuate, news will create temporary panic, but great companies tend to compound wealth over extended periods. Focus on businesses with sustainable competitive advantages, strong management teams, and addressable markets that continue expanding.